So we just arrived in Prague, where I'll be speaking tomorrow at the E8 event as one of the guest speakers. And as you can see, we're currently in just a hotel room for the first couple of nights. After that, I'm going to be trading in Prague from a couple Airbnbs until Friday. During the flight, during this travel so I was in Switzerland, as you know from the last episode where I covered the trades that I took to chip away at my E8. I actually passed my first E8 account, which is such a coincidence, right? I'm here to speak for E8 at one of their events, and I actually passed one of the 200Ks, and I've got a couple positions running. I can show you on my meta, and they're doing bits. So as you can see, I don't know what's easiest. I've got one running already, like stop loss break even, which is really nice. So the other one, right? So one hit 218, and the other one is now currently up at, as you can see, 216. So it needs 2% more for that one to really slap through. Once that one has slapped through, we'll have another 400K funded, which I'm super excited about. All in January. Okay, last day of January. This is the last day of January. But yeah, great news. Great news. Couldn't have made it any better. I'm super stoked. And I'll be showcasing you guys. I'll be taking you guys with you. I'm going to meet up with the guys with the team of E8 right now. We have a dinner tonight. So a little bit of vlog life. So let me get used to this, and I'll bring you guys along.
There we go. Yeah. Yesterday morning was crazy. I had to come to terms with the fact that it's not a maybe. That shit is in stone, sealed and signed. She not my lover like Billie Jean, but the kid is mine. Sandy used to tell me all it takes is one time, and all it took was one time. Shit, we only met two times. And both times were nothing like the new times. Now it's rough times. I'm out here on front lines just trying to make sure that I see him sometimes. It's breaking my spirit. Single father, I hate when I hear it. I used to challenge my parents on every album. Now I'm embarrassed to tell them I ended up as a co-parent. Always promised a family unit. I wanted it to be different because I've been through it. But this is the harsh truth now. Fairy tales are saved for the bedtime stories I tell you now. I don't want you worried about whose house you live at or who loves you more, who's not there,
and Daft Punk helmets.
Before you got here.
So I just recorded 4 case studies for my students in AO. And the guys in the Ether, they also have access to it. Going over all the trades that I took last week was honestly one of the most memorable weeks, especially in January. Just price action just really finessed through. And I just kind of realized just how grateful I am when it comes to these opportunities and the feeling that you get when you are together in community events like this in Prague with E8. Absolutely beautiful. I'm flattered that I got even invited to speak at a panel, do a podcast, do some sort of like little masterclass and all that good stuff, and just connect with people offline, which is just very, very beautiful. But overall, before we go into the charts and whatnot, I want to just explain kind of how grotesque this week has been. Not only for me, but also for my students, and just seeing the accuracy, seeing the improvements that they're making is just so important to me as well, because we have an average of nearly 3.8% in January across the board. For my students, we've got some home runs, which I find very difficult to understand as well, like outperforming me, which is really, really interesting. So with one of my students being at 10%, and you'll see that on Instagram, I'll potentially start doing a couple case studies on YouTube as well, going over those trades and what goes right, what goes wrong, especially seeing how they're doing those percentages. Another student is at 7% for January. And then here and there, a couple at 2, 3, 4, which is great. Obviously, there are a couple that are in drawdown as well. You can't all be at the profitability. You can't always all be up, but it just kind of put it into perspective of how crazy this game is. And some of you may be kind of scratching your head like, oh, Max said the average is 3%. That's not even a lot. But my goal is to get you to execute in a fund type of manner, taking the right risk, using parameters in place, right? Daily drawdown limits of 2% until your account is reset, hard breach limits at 8%, kind of like prop desks do, really kind of to emulate that professional environment rather than gamifying these AO accounts that I give my students. But regardless, I hope that you've enjoyed the little bits of Prague here and there, and I'll be trying to put a little bit of B-roll content afterwards that you can see afterwards. And other than that, I really hope that this is the start of something beautiful. As you can see here, I'm currently in this little conference room, which is great. And I'm just recording my educational content for the group, so my start of weeks and my case studies. And then from there, we'll be going onwards. As you can see, beautiful view here. Very, very content with this. And then I'll be here for roughly 1 more week until Friday. Just really trying to crunch out those last couple of accounts. Trying to get that, because also insane. The same student, Raphael, right, that is up 10% on his AO account, passed 5-step phase 2s, and he's got 1 million in funding, which I can't really explain. I find that I found that crazy, and I want to get to that level again. So if he can do it, I can do it. If I can do it, he can do it. And if we can do it, you can do it, right? So what are you waiting for? But yeah, that's that. I'll be bringing you guys along. I'll be showcasing the charts, the trades in a second. But I just wanted to make sure that I sit down with you guys again, answering a couple questions. So let's do that first from the comments, and then let's go into the breakdown of last week. I know I did only 2 trades last week. I'll try to do a couple more, but I want to make sure that it is fair for everyone. Giving you guys these gems is really puts a smile on my face, and I need to keep up with all the trades that I take as well. So yeah, I'll see you guys with a couple of Q&As first. So one of the questions that I got asked is, how did you prepare for being a trader? What kind of habits did you build, and what habits did you abandon? Very, very good question. I could really go on about this for a really long time. But for me, the best way that you prepare for being a trader and prepare for this entire journey yourself is by executing meticulously the entire time. And what I mean with that is by being process-oriented, right? That involves you going over the same iteration over and over and over again until you actually improve. And there's a big difference between just blindly doing the same thing over and over again and actively reassessing what you've done, right? We are humans. We are these machines, these vessels that want to operate at a high level. And in order to do so, you also need to be very in tune with yourself. That entails that you look back, that you reflect, and that you look inwards as to what you're doing. Now, majority of these traders, and what I've said at all these events and all these panels and all these podcasts as well, is that you step into the space trying to chase these spikes of dopamine, chase these profits, quick profits, right? All that good stuff. Those are habits that you need to abandon. You need to abandon the habits of trying to chase this feeling, this facade of quick money, this get rich quick scheme, all the things that you're being sold. It is never in my intention to sell you this dream, because many people won't have the operational skills to maintain that level of execution, right? I'm not here to convey you that it's easy, because it's not. You need to understand that you're going to be operating in a field which is very, very difficult, especially if you want to operate at a high level in this field and you want to go anywhere near as professional as I went. You will sacrifice many other things, and many other things will fall in order to get this into place, right? So the best way, if one were to prepare, I guess, what you could be doing is building a very good foundation. Foundation is very, very important. You want to make sure that you have a foundation in place, such as discipline, routine, inside and outside of trading, right? The technical aspect of it, the theoretical aspect of trading is very, very easy, in my opinion. That's something that you can learn like this within a year. That's something that you can implement quite quickly in back testing to see whether or not the edge is there on a technical manner, right? Doesn't matter how mechanical it is or not. You and I were CFD traders, right? We're trading on MetaTrader, we're trading on TradingView. Whether you're trading Forex and whatnot, you're always going to be doing anything with those candlestick charts 90% of the time. So it, the professional aspect of it and the data doesn't change. And the point that I'm trying to make here is that there's always going to be a little bit of discretion in it. The edge is discretion. The edge is you. I can replicate my strategy and give it to like one of my students as well, but it'll never be 100% the same. And that's the beauty of it. Like, I can teach you my entry model. Like, it's a one line. You know what my entry model is. I've done nearly 50 breakdowns of trades already on this YouTube channel, going over my entry model, where you can see different ways that I'm entering the market. That's not the hard part. The hard part is everything in between, everything that comes before the entry model, everything that happens after you have entered the market, and then everything from entry of your trade towards the result of that trade, loss or profit, right? That is the difficult part. That is the edge, right? Whether you have a negative strike rate, whether you have a positive strike rate, whether you have a big RR or negative, like a small RR, that doesn't matter. It's knowing what you have and knowing how you implement what you have, how you react, right? That is the edge. So in order to best prepare for that, and in order to best become this machine, which many people quote there, but I too still struggle. I hate losing, especially when I lose and I need to document it on social media, right? In this road to 100K, I've documented my losses, right? It's part of the game. I just know that I can manage them really, really well. I also know that my strategy permits me to not lose a lot. I've got a positive strike rate above 50, right? So I know that my net click is positive because I myself know that I cannot handle a big losing streak, right? So it's having that foundation, knowing who you are as a person, knowing what your habits are, your characteristic traits in conjunction to the markets and to trading, and implementing those things, making sure that you know how to implement those things, and then also improving upon them. That may sound like a lot of like vagueness for a second, but if you really just think about it, it's really not rocket science at the end of the day, right? You know what you can do, you know how you can do it, and you also know what you have to do in order to improve. It's never been difficult, right? It's never been a holy grail in order to become profitable at trading. Like, many of you just don't want to actually tackle the issue that there is, and will do everything outside of the issue in like this sense of avoidance, to hope that like sweeps the issue under the rug, and that you temporarily have this spike of profitability, and then we'll face a new issue. And then that cycle repeats over and over again, whether it's finding a new edge, right? Jumping from strategy to strategy, a different instrument, a different style of trading, all those good things. It's making excuses rather than solving the issue. What habits so those are habits that I built. I built a foundation, such as routine, discipline, like the pillars that I have inside and outside of trading, being very mechanical with my journaling for a longer period of time to be super in tune with my data. And that's one of them. And what habits did I abandon in that sense is, I think that ego, that's something I had to accept. Losing, that's something. So the habit of finding those excuses, it goes hand in hand, right? It's pretty much the same, but from the other side of the coin. I abandoned the fact of making excuses for myself, putting myself in like the victim role. You're the victim of your own consequences. right? Um, that's the name of the game. Sorry, not a victim of your own consequences. You are a victim of your own choices that you make, and the consequences of those are completely because of you, because of the choices that you made. Um, I am the victim of my own consequences. There you go. You get what I mean, right? So excuses for yourself, that is a big one. Stop doing those, and you will see that you become a lot more of an authentic person, but you can also really just accept who you are. And then from there, you can actually start building. So that's that. I know I dabbled on that topic maybe a little bit longer, but I hope that that's one of the questions that I can answer. And again, if you have any other questions, just drop it at the bottom of this video and I'll try to answer them in the next one. So let's go ahead and break down a couple of the positions that I took last week, going over a general blueprint on my execution time frame where I showcase you guys exactly which positions I took, how I took them, and kind of my mindset going into them. I realize that it's a little bit confusing as to which account and what I will do where. So I'm going to do separate videos alongside these episodes instead of just explaining my thought process, the positioning that I took where, and then I'll be showcasing, let's say, each funded account, challenge account separately, because otherwise I have to explain what I took exactly where on the day itself. And I'll try to do my best to do so, but it won't always be as streamlined as I hope it would be. So without further ado, let's just go into kind of the ETF of last week. So we stayed in on those buys, let's say from Friday onwards. We talked about these, right? Where my SL was, that was in the previous episode, chipping away at the E8 accounts, and then next week commenced. And the first thing that I want to showcase you guys first is a little bit how higher time frame looked like, right? If we go into, let's say, H1, and we go into what our H1 annotations look like, then you could see that, last week, all of last week, what we were looking for was buy side into then sell side, right? This was that Friday that we had right here. We went right into that buy side here. And then we had, this was kind of the most important aspect, right? We had this bullish imbalance right here, which is what we were looking at. And then from here, we were looking to trade into previous weekly high, right? We wanted price to go lower. This is something that you see often enough, something along these lines where we had 50% of the range right here, kind of that EQ at the moment. And then we wanted price to go higher. And this was the big issue that I see a little bit often, especially with my students as well. I see that you have an idea, right? If we go back all the way to just these 2 days for now, and we go into M15, right? You can see that this was where M15 was, but many times you will have a statistically favorable area, which in this case would be below that EQ level, right? If this is EQ and this is kind of that low to that high that you have right here, so I want to make sure that you can see it as well. So if this was EQ, right, if this is your H1 leg like this, all the way like that, you obviously want to be below 50% to then get into, let's say, favorable areas to long from. But that doesn't mean that if price goes into that H1, H4 array, that you shouldn't be prepared, right? That is the big mistake that I see being made more often than not, is if you have your most recent array and price does showcase bullish confirmations, right, then you should be participating in the market, especially when it comes to those really big expansions to the upside, price coming lower. And although, you know, everything below here is where your favorable area is to go long, but if that doesn't happen, you need to be content with going long in these two areas, right? So I'll showcase that one more time. What I mean with that is that if you have an H1 array, which was in this case, the H1 bullish balance right here, as such, then you need to be, aggressive enough to adapt in that sense. So Monday kind of came through And I want to talk about what I missed on Monday because it was a really nice opportunity. It was very much, present, right? But you see here, we have that liquidity grab, right? We have price kind of giving a really awkward shift. And then again, look at the things that you're looking at. I'm at M15 here. I'm looking at price inducing that bearish array, which it did. Then, we're well below New York Midnight Open. And this was a situation that you can get involved in. This was on one of the accounts that I played, not majority of the accounts, but one of them was playing just this shift, right? Just this run right here and going into previous daily high, right? Which was left behind. These are quick plays, right? You don't need a pullback here. Why? Why do you not need a pullback? Because your run on opposing liquidity is shallow, right? That is a shallow run on opposing liquidity. So shallow run on liquidity. Shallow run on liquidity. You get what I mean. You have a market shift here, and then you have price just absolutely going for that high that it left on Friday. So that was one position, M15, nothing crazy. We have arrays, we have that area right here, like this, which is our displacement distance. And in that displacement distance, we have intent to the upside. Remember that, because that's going to come through on the first main position that we see next. And that's what we have afterwards, right? So if you follow me with Tuesday, so this was pretty much Monday. It was one crazy week in terms of positioning, and I took lots of trades when it comes to and E8 and Quant-Techo, and I'll showcase you the standing afterwards. So Tuesday, same story, all right? You can see just what your standard procedures should be. Very stagnant Asia session, right? Consolidation before that was ideal from Monday into Tuesday. Then price protracts lower into bullish order block H1 into a refined M15 imbalance and then just sends it. This was the first time that I refined my position that week into some sort of M5 positioning. And I will showcase exactly what I did. Right here. Imbalance, both of these highs could be seen as market shifts, this one and this one. And then imbalance break, boom, midpoint, BPR, right? Triple BPR from the manipulation pretty much above New York Midnight Open. Stop loss under the order block on your execution time frame, and then first partial at Asia high. If not, you can see I took first partial here, T1 at local high. It was either or, right? I know a couple of my students took Asia high and then previous daily high, did a 60-20-20. I did a 40% partial here at T1 because it's internal and it's not still the main internal target, which was Asia high, as you can see. And then from there, I went the remaining 60% of the position fully out at previous daily high. So that was that. Very clear, very clean and concise positioning. Not rocket science, in my opinion. Quite easy, quite lax. And yeah, let's go into the next. This is where it got really interesting because this set the tone for the remainder of the week, and this really set the tone for the short buys. So let me showcase that right now. So if we look at pretty much what happened from Wednesday onwards, and I want to really showcase you guys just exactly what I mean with that. Everything was short-sighted, right? So if I quickly exit this bar replay, you can see that we go into this flip. And this was the start of a really, really nice sell-side run. And I see way too many people overcomplicate these type of setups when it's literally in front of you. When you trade liquidity concepts like I do, you know the terminology, you know the concepts, you know you've got the discretion to do stuff like this. You shouldn't be fearful in moments where it looks really good, because that's exactly when you need to execute. You can see I'm on M15. We've got this buy-side liquidity right here off of the backbone of this headline announcement from Trump. I'm not 100% sure what it was. I forgot just ever so slightly. But what do we have? H1 imbalance right here that price tapped into. So Monday, we protract above New York Midnight Open into that H1. We leave behind intent in that displacement distance, and price comes back in, leaves a shallow market shift, boom, into a shift zone, into an imbalance, into an OTE, whatever you want, and you could run this all the way down. This was for me the first position that I started like scaling on my E8 accounts. This means that I was running this as the week went by, right, and just taking partials out. The majority of the position was taken out right here at the first like real order block from the previous day, right? And then from there, you could see that all of this, if I just showcase exactly what I mean, there was so many opportunities, right? You go to H1 and you understand that your like open pocket is right here. This H1 bullish imbalance, as you can see, this is pretty much where you could run your entire shorts to. So running bearish, bearish, bearish order flow 1, 2, 3, you can see that this all just crashed out all the way to this little open pocket there. It sometimes it's really not as difficult as people think it is, right? And that's kind of what baffles me, is that when these opportunities do showcase themselves, you need to be able to take them, because you've been waiting for and planning all these moves, and then you get too scared to take the moves because they look exactly like what you learned in the textbook. And it's just such a shame because they don't come often, right? You demand perfection, you get perfection, you don't take it. It doesn't make sense, right? So that was pretty much Tuesday. Tuesday just panned out to be very, very nice. And then you can see Tuesday into, let's say, Wednesday into Thursday, we have pretty much the same thing, right? A very shallow run on liquidity, although this run on liquidity from Wednesday was on an H1 imbalance, right? A higher time frame imbalance. Here we had nothing. So you had to be a little bit more, let's say, lenient with what you wanted to ask off of your market shift. In this case, a body close. And what did we get? We got exactly that. Pan this out to the group exactly how we wanted it to. And this was where we had our first kind of like run that we panned out all the way to the end, right? So very, very, very clean moves overall. Really nothing to complain about. This was all in all an amazing week so far. This position, again, M15, I don't even need to go into M5. Great short, great isolation, running this all the way to pretty much this target overnight, right? Swinging that into the situation that we had in Prague, which was really nice. And this position was the first kind of error that I saw many people take. This was kind of where you see an E1 like this. It's like, hey, boom, boom, and you want to enter this shift. Really, really, really stupid to do. What I did in this case was an M5 that you can see here, and I'll be breaking down just a second. If I just showcase pretty much Friday like this, and we go into M5 like that, you can see one of two things, right? Your standard model right here is what we're looking at. All of this. Price runs buy sell liquidity, create sell sell liquidity. This is where you want to get involved, right? This is where some people got involved off of this. And that was the first position that you can run to the lows, right? Cross-reference, DXY divergence right there, and then out of the position, right? That was one of the positions that I took. The second one was this one right here. And that was very, very aggressive. Not something that I condone to everyone, but you can see kind of the gist of this, and I'll explain to you exactly why. Because we have expanding Asia range arrays, right? So you can see that's M15, it's M5, sorry, it's M15 as well, and it's also your H1, right? There you go, M15, we go to H1, and you can see that on H1, it is exactly the same right here. Entire imbalance, and this is when it's useful because Asia expanded overnight. What that actually showcases us is that, hey, because of this heavy expansion right here, from this like buy side move all the way to this sell side move that took out previous daily low during Asia session, it actually holds weight. And it's during those moments that you can use Asia arrays if it is expanding. That's the only time that it's relevant, right? Because that actually showcases that during that period of time, there was a vast amount of volume, or at least a volatility being injected in the market due to either a lack of volume or due to a surprising injection of volume. And that is when you can actually use Asia range arrays into the day after. And that's exactly what we did. So these positions, I'll be showcasing the partials and everything. If not, you've already seen it on my Instagram in my wins highlight, exactly how I did these trades, breaking it down, giving me nearly 400k in challenges and evals that I passed with E8, totaling everything up to 800k in Propfirm accounts. So that's very, very nice, something that I can be quite content with. But I hope that that broke down pretty much all of last week, exactly how I did it, where you should be looking at, the standard protocols, the entry models, and all that good stuff. Because it wasn't difficult last week, in my opinion. It was really, really easy. And I'll be seeing you guys next week, where we can hopefully start chipping away at the counter.